Obviously, with a quick run up, the initial reaction was obviously very positive, but obviously the sell-off is that they really don't believe the words that are coming out of his mouth. I mean, I think that they want to see something more direct about it. They want to be able to feed off of something a little bit more substantial than just saying that we're going to be flexible.
What do you make of the market action, Matt, that big rally that we got and then completely losing it and now diving deeper into the red? Market not convinced?
No, not convinced at all. We keep talking about sell the rip, right? And this is now the new mantra. Clearly, these got to be more than a trial balloon from our Fed chair and from Williams, too. We can't keep having the diverse opinions. We can't have the president on one side. This is clearly an indictment on what we're seeing from the Fed and from what we're expecting out of the government if they do shut down.
Hey, Rick, does the Fed have a communication problem, or does the market have an understanding problem? Which one is it? Today is a perfect day to ask that question, given the Williams pop and then the drop.
Well, I think we can learn a lot by just keeping it simple. What Williams said gave the market a bit of an uplift. And in my opinion, if we zeroed in on exactly what that was, balance sheet talk, that nothing is static, that everything is potentially up for change. That was the bounce, but it didn't hold. Why do bounces not hold sometimes? Because maybe that wasn't the main driver of the volatility we've seen for the last 6 to 8 weeks. That would be my read. Listen, I think there are issues. I think the Federal Reserve is in a no-win situation, and I think that no-win situation was created by the Fed and central banks themselves. Having this gap between what the Fed thinks and says and judges or hypothesizes about versus the direct movement of the marketplace, they're never on the same frequency. I think you're seeing a big margin unload. I think there's a variety of reasons why. But, you know, with machines and modeling, ultimately positions get very large, volatility's low, that packs them more with risk parity trades. Then you have all these credit spreads that are most likely margin avoidance, and you just get this leverage, deleverage. I think the Fed is in a no-win, and I don't think they've made a mistake yet, but being able to control the market is beyond any Fed, even if they were godlike in their approach and they had a crystal ball. I do think, though, that Mr. Williams' words were comforting to the marketplace, and my guess is over time the balance sheet's going to be an entirely new topic, maybe nothing that's going to change directly in the next 4 quarters, but I certainly think that the potential for it to change will be important to the market.